Welcome to The Exchange with Breaking Views. I'm Rob Cox. I've got a special guest with me here today. It's Brian Moynihan, who's the Chief Executive Officer of Bank of America. Welcome, Brian. Thanks for coming.
Thank you, Rob.
Are you getting a lot out of this? I mean, what do you I know you've been discussing with regulators, other bankers, sort of the future of the financial services industry. I'd love to get your sort of take on like where it's going and how you guys are going to manage to make money for shareholders in an environment, both regulatory and economically, that's quite difficult.
So that's an easy question, but
yes,
let's try to parse it into a couple parts. First of all, what we all try to do here is there's very few forums we get the combination of things. So we have industry groups where the industry gets together, and then sometimes the regulators and others will come and talk to you, or we have regulatory times we go see them. But there's very few we get policymakers from true government, supervision, regulation, and industry, and that provides a forum for discussion. Now, it's not a decision-making body, but you can clarify positions, you can clarify understandings, you can share best practices or at least practices of what's going on. So the value of this value of Davos from that basis is very sound. And then I also do client work and other things, and a chance to do that. So that makes it sound. But backing up from that and talking a little bit more about what's out there is we are still in a slow growth environment for most Western developed countries. In the, sort of the new part of the discussion, it's the same discussion as before. How do we get safety and soundness, capital, liquidity, the right risk weightings and uniformity? That's all still there. But the question now is how do I make sure that we don't hold back the growth that we so desperately need in these developed economies at the same time? And that's a ticklish issue, because part of the reason we got here was too much leverage. We've taken it out, and people were saying, well, then the economies aren't growing as fast, and you sort of have this problem.
What are you hearing from clients? I mean, it's one thing for you to talk to the regulators and say, well, these rules don't work or do work for us, but it's really the clients who ultimately are the ones who need the credit and need to, so they are the engines of the economy. What are you getting from them?
Well, their concern at first was none. In other words, they thought this is all about banking and all about technical banking rules that only someone like myself or my colleagues could enjoy, and figure out. What they realized after time was some of the changes in terms of, say, derivative transactions might impact their ability to hedge their inputs or do what they need to do. And so they're now interested. And so what the clients provide is a good reasoned voice about the, quote, real economy and what really needs to be done. So, and I think it's brought up more subtle areas, and it provides credibility to our industry that what we're saying has merit.
It's one thing if it's like the greedy bankers that have destroyed the world or whatever, however you want to, call it. For you guys to complain about some regulation is one thing. If you actually have real companies out there doing it, I mean, that's probably quite important to get their voices out for you guys.
So, Rob, I take it out of the complaint. For us to try to shape regulation to make sure it helps us serve our clients, you got to have the clients talk too, because otherwise, for lack of a better term, everybody's got to agree that what we're saying is exactly the most important thing to the client. So, what's clear now is, as you get in the third and fourth order of figuring out what you're doing, we've got to make sure we maintain the long-term financing capabilities of, say, the insurance industry to provide project finance, or the derivative trading activities I spoke about. There's things like that really affect industrial world and really affect job formation. And while small and medium-sized businesses create a lot of jobs, a lot of it is created off of large companies using them in the supply chain. And so if we slow down from the large companies, we'll have an impact downstream. So that's all going on. I think it's very constructive. But what's unique about Davos is you can do that here. And so you can literally walk from a client and a regulator and put them in a room together with you and say, let's have the discussion.
He said it, not me.
Well, it's not that way. But say, listen to him. And that might change the answer 10% or 20%, but it's the right way to change it. The wrong way to change it is just to have people complain.
No, that's right. Now, let's turn to Bank of America.
Sure.
I wrote a column a couple years ago when you had just taken over as CEO. It said this could be the greatest money-making bank in history. It's got all these unbelievable assets, obviously, clearly in the U.S. market. It's been a tough couple years. Where do you feel, and I mean, what inning are we in terms of getting that to making me look right with my column, Brian?
Well, I want you to be right, and I want you to be right as fast as humanly possible. So let's start there. Let's talk about what we've been doing. Think about taking a company which had done 6 large acquisitions that acquired 200,000 people, and just think about all that from 2003 to 2009, January 1st.
Yeah.
Then think about going through the financial crisis. So what we've been about is streamlining the company, because a lot of stuff that came with those companies that were acquired, everybody points to the mortgage thing, but there are other things that weren't as important to us. So we said, let's get the strategy right. We started out right at the start. 3 groups of customers, people, whether they're general retail customers, the wealthiest people in the world, companies, small business, large businesses, and investors, people who provide capital to companies. Those 3, everything else we do, we've been getting rid of, and we've gotten rid of a lot. It helps us with our capital, helps us with liquidity, but also really focus.
Yeah.
In those capabilities against those 3 customers, best consumer bank, great credit card company, a mortgage company we got to retool, best wealth management business in the world, best middle market business in the United States, best small business bank in the United States, great cash management, number 2 investment bank, top 2 or 3 trading counterparty. So you put that all together, that's a heck of a franchise.
Yeah.
So
but that's, of course, that's the challenge.
To now
putting it, knitting it together.
It operates together. That's and underneath that, for some of your colleagues, not necessarily you, would have written that, 2 years ago they said, this Merrill Lynch Bank of America thing, or 3 years ago, the bankers and everything, they all stayed. We've done a great job. Our market shares increased every year. So they're knitted together. The question was, with all the mortgage and other things going on, there's so much noise. So that we have been working to put behind us as fast as possible. Double the capital. Increase the liquidity dramatically. Our capital ratios are equivalent to our peers.
You've got what, 127 billion or something of tangible common equity. Of course, how do you make a return on investment that's equal to your cost of capital or better in an environment like this?
Well, especially with the last part of it being the important thing, and the word from the Fed the other day is when they say I'm going to keep interest rates low, or I project to keep interest rates low, they're saying it's a slow growth environment. So we went to the cost side, and so you heard a lot about our company is how do you get the costs out, and so we went to the cost side early on, but we did it in a structurally important way, which is saying, think about all those acquisitions, think about all that process, think about all that stuff that hasn't had a chance to be looked at. Go back and look at it. 200,000 ideas came in on the first phase, and that's what we're driving the cost structure down. So even in a flat revenue environment, I've got to open up the earnings stream over the next successive quarters to the levels that are acceptable for the shareholders, and that's what we're working on. So we had the crisis mode, get that behind us. Now we're into the sort of fine-tune the operations mode, and we all look forward to the day where the economy is going to give us enough growth where we can drive the growth mode. But the reality is we're in that middle segment now, and that's what we're up to.
Okay, well, thanks a lot for your time. I know you got to go out and talk to regulators and clients, and if you can, go skiing. It's nice out here.
You can go skiing.
I'll
I
go
don't
skiing.
get to do
Okay. I'm Rob Cox with Reuters Breaking Views.